Welcome to the Asset Coach and Tax Strategist YouTube channel. If you're a subscriber, thanks so much for subscribing. If you're a first-time viewer, thank you for spending your time here with us. If you like our content, please give us a thumbs up. For you new folks, Asset Coach Tax Strategist YouTube channel is based on the book Economic Termites. This is a book that I wrote a few years ago talking about taxes, inflation, time, laws, and regulations. Also, I wrote a second book called Farming Assets. Those two books is really what this whole channel is about, addressing those situations and how they affect you and I in our ability to grow our wealth. So as an asset coach and tax strategist, my name is Robert Wolf. I am the CEO and founder of Terra Firma Business and Financial Consultants and its affiliates. We have a bunch of companies that we've built out this ecosystem surrounding the basis of what we talk about on this YouTube channel. So if you're not a subscriber, hit that subscribe button. We drop episodes every Thursday. Again, if you are, thanks so much. And let's get into this next episode. All right. Welcome back to another episode of Asset Coach and Tax Strategist. And we've been working on this series on California. It was originally a two-part series, just talking about them being the fourth largest GDP if they were a separate company and all this kind of stuff. And so we kind of broke this down in part one, part two, what this looked like with regards to California being the fourth largest country, essentially, GDP-wise, if they were a separate country. And so the first part was talking about that. Second part was talking about really what would happen if they lost some of the technology, the financial, the entertainment companies, and they pushed them out. And the reason why I say push them out is you saw the previous two episodes, California has a history of pushing out industries, of rejecting industries, driving industries out of the state. And quite honestly, if they hadn't done all of that, they probably would be the second largest GDP, but only behind the United States. But they have made decisions over the years, the last few decades politically, that have driven out companies and people as well. Most recently, since 2020 and the pandemic to now, we've seen California have a mass exodus. We're seeing a lot of their issues and numbers. But this third part, which is a surprise, because what's been happening as I've been doing this two-part series is there's been certain pieces of information that have bubbled up. And one of the things we did not talk about is California's energy crisis. And I'm not talking about them not being able to keep the power grid up. And we all know that California has made certain emissions rules and regulations for cars because they're trying to drive cars, the oil companies, out of the state and turn everything to EV. And they can't even keep their own power grid up. And I mean, when I used to live in California, we had rolling blackouts. That was a concern. One of the things that if there was a fire now, they turn off power in those areas. Or if there's high winds, they turn off power. So because one of the big fires a few years ago, about 5 years ago, there was high winds, power line broke, started a fire, and created thousands and thousands of acres that burned up in Orange County. You can imagine the cost of that. So what has California done? Well, over the years, making their decisions on oil and emissions and refineries, back in the 90s, they had 43 refineries. Today, they have 7. And that is going to be closer to possibly 3 or 4. Valero has already announced that they were going to leave the state as of April of 2026. They accelerated that at the cost of $1 billion to themselves to leave the state earlier. Chevron has decided to move. Exxon, and then there's some refineries. And what's interesting about this is that if you just go to YouTube, I'm going to share my screen, and you just go to YouTube and you type in California oil crisis. That's it. Type in California oil crisis. And what you're going to find that pops up is what California is doing to drive out oil. And Newsom has had this battle with them. And the sad thing is that he is going to be losing this battle. And the reason why I say he's going to be losing this battle is because the oil companies are willing to lose billions of dollars to just leave the state. And if you look, is ExxonMobil has left, begins to exit California. This was 2 days ago, by the way. Governor of California panics after Exxon begins exiting California. We already know some of the other Valero exits. And now Newsom's mad at the oil companies for leaving when he drove them out. And now that they're leaving, he's upset that they're leaving him. But at the end of the day, this is an issue. This is what the governor wanted, and now it's happening. And so one of the things we didn't talk about, we were talking about technology and some of these larger world economic companies, but you see Phillips 66, why they're leaving, right? These companies cannot afford to work in the state of California anymore. And some of the refineries up in Northern California that are closing actually represent 50+% of the oil production. The refinery of gas for cars, 100% of lubricants in the entire state of California. They're closing. Why? Because of California. When people ask, well, where are you from? And we say California, they're like, oh, why'd you leave? And I always respond, because of California. And the reason I say that is because that's why. We left California because of California. The decisions that they have made politically makes it almost impossible for us to stay in the state of California. And so we had to leave. And now what's happening is that the governor has chased all these companies out, and now he's upset because it's going to affect, that's right, it's going to affect prices. And the unfortunate thing is that this is the bet he's made. So now he's put in a position where he's got to lay in it. He's got to lay in this bed. And this is a big thing. Big thing. And now what's California going to try to do? They're going to try to what? Reverse. They're going to try to backtrack. And can they? Can they backtrack after years, decades of driving this industry to where it's at? They have the highest emission costs for refining gas. They cannot bring enough gas, export oil from other countries, because the system at the docks is not built up to be able to collect that much oil from overseas. And even if you bring the oil from overseas, who's going to refine it? Nobody. So you're going to have to go to other countries that have the ability to refine oil to the guidelines of California. And South Korea has that. But you think they're going to give California a discount? Heck no. They know from the research I've done, and this could be wrong, okay? But the research I've done, there's only 3 other countries that have the capability of refining oil to the standards of gas in the state of California. Now, all the refineries in California did meet those standards. And every single one of those refineries that have closed recently were all perfectly capable. There were no mechanical issues. There was no issues other than the political environment driving costs to do business. So much so that it's cheaper for a company to exit out of that state, costing them hundreds of millions of dollars, if not billions of dollars, to leave that state because of the cost of doing business in that state. It made more business sense to leave than try to figure it out. Why? Because they already tried. And the state, the governor, has dug in. And now The unfortunate thing is that the Californians who already have some of the highest gas prices are going to have even higher gas prices. They're going to have gas shortages like the 70s. But it's going to be only in the state of California. You can go right over the border to Oregon, over the border to Nevada, over the border to Arizona, and get your gas at half of the cost. Here in Texas, we bounce from about $2.20 a gallon to $2.60 a gallon. We've had it up to $3 a gallon, depending on what's going on. But since I've lived here, that's about what it's done over the last 5 years. California is anywhere from 4.5 to 5.5, depending on where you go in the state. Usually, when we go back home to California, we usually go to Orange County. So you'll see it anywhere from 4 to 5.50, depending on what. And that's just for the base, the bottom line, the cheapest gas. So what's going to happen when you can't get any of your gas from refineries in the state of California? Demand's going to increase. Supply has dropped. Basic economics, what's going to happen to pricing? It's going to skyrocket. So that $15 an hour minimum wage is now not going to be worth it. Can't do it. Because not only have you driven costs of the human capital, by the way, minimum wage is minimum wage. It's an entry-level job. It's a stepping stone. It's not a career. It's not a family wage. It's a stepping stone to something else. That's why the community colleges give pretty much tuition for free. You can go get an education, an AA degree, or some kind of skill for pretty much no cost. And then go get a job that is $20 an hour, $25 an hour, which is a family wage. But that $15 an hour wage now is going to not only has that driven costs up, the cost to get goods and services into these businesses, restaurants, whatever they are, is also going to skyrocket. So what are people going to stop doing? Going out. Or they got to make a decision. We leave the state like we've done. My wife, my family, and I, we didn't want to leave. We don't want to leave our family and friends. They're our family and friends. We love them. But we didn't see a future for us. We couldn't afford a house. We couldn't afford the cost of living. We didn't see the political environment changing to a better change. And I hate to say it, we were right. I'm so happy we left 5 years ago. Tomorrow will be our 5-year anniversary in this great state of Texas. Building a new home, a new lifestyle, new community. We were forced to do that. Like many people were forced to do that. But it was one of the best decisions we've ever made because it gave us the opportunity to thrive. The cost of life here is less costly. Now, there are certain things, not everything is a perfect environment. I'm not saying that this is, we're in heaven. There's only one heaven. But it has grown to be a great home for us because we're turning it and we've created into that. But the political decisions that the state of California has made is putting them in this position. The arrogance to think that you can continue to make these types of decisions over and over and over and over again because you're California. I've said it before. California thinks they're still the prom queen, but now they're in their 60s. Just isn't the case. There's only so much the business environment can do. There's a lot of money to be made in business in California. A ton. And California knows that, which is why they continue to make the decisions they do. That's the arrogance of them. Rather than making decisions, you realize the largest employer in the state of California is California workers, meaning they're employed by the state of California, the government workers. It's the largest employer in the state. That shouldn't be. That shouldn't be. That is not a income generating comment. A government employee does not generate income to the economy. They're amazing people. I'm not saying that. I'm just saying the position as a government worker doesn't create cash flow into the system. It takes it out. Because you have to have revenue, and the only way a government makes revenue is through taxation. That's it. Now, they can borrow in bonds, but how do they pay those bonds back? Tax revenue. Who is that revenue? The citizens, the businesses. I mean, it's clear economic decisions. But California has made these decisions year over year, decade over decade, and it's about to break. It's about to break. Like in part 2, when we talked about some of these companies having to exit, or if they decided to exit, this energy crisis could be that tipping point. We could see in the next 5 to 10 years a huge, and California is still the largest employer to Fortune 500 companies. They still have more Fortune 500 companies than any other state in the union. Still. That's part of why they have the ranking they do. But the cost of doing business in the state of California will turn shareholders against the state. These companies are going to have to make a business decision. They've been putting it off, but they're going to have to make this business decision. Yes, there's a cost to leaving. There's a cost to moving. Absolutely. But the long-term positive effect could be very significant. And with that goes jobs, which creates this exodus out of California again into other states in the union. Just the facts. So anyways, not sure where this will go. We'll all be sitting on the sidelines eating popcorn watching this show. But we know that if California can tell us one thing, is that they're very consistent. And the political environment in California is very arrogant and very old. The politicians in California have been there the entire time. They have no one to blame but themselves. They have a supermajority. They are a blue state. They are bluer than any other state. By choice. By fraud. By whatever reason you want to say. But now they've got to live in that bed. And it's a shame because there's a lot of really good people, taxpayers, that are the pawns in this entire scheme, in this entire game. So if you're a subscriber, thank you so much for subscribing. If you haven't subscribed, go ahead and hit that subscribe button. We drop episodes every Thursday. If you have any comments, drop those comments into the comment section. If you like our content, give us a thumbs up. Thank you so much. By the time you watch this, New Year's will be here. So hopefully you had a safe New Year's. And here comes 2026. Bring it on. Let's do this. Make it a great day.